Hello and welcome to this exclusive interview. Joining me for this interaction today is Chirag Patel and Manuj Jain. They're co-heads of product and strategies at WhiteOak Capital AMC. Now, for years, we've been, listening to this whole India shining narrative. And finally, it is. India's economy is not just growing, it's doing pretty well. So today we dig deeper into this phenomenon with Chirag and Manuj. They've co-authored a very interesting explainer on India Premium in the July edition of Wealth Insight. Chirag, first up, what is this India Premium all about?
So basically, it is very simple thing. So we assess the valuation of the market through PE multiples. So what multiples we are giving to the current earning, which is nothing but a present value of your future cash flow. So for example, if today's earning is 1 rupee and the present value of the future cash flow is 10 rupees, I am ready to give 10 multiple to the present value, right? So why India is trading at say 83% premium to the emerging market, because our PE multiple is close to the range of 22, and the emerging market as a basket PE multiple is closely trading at 12 multiples. So we are trading at 83% premium to the overall emerging market. Now India has already been traded at higher premiums to the emerging market, and the question is why it is trading at higher PE multiple and what is there for the investor. So the entire note is on the same thesis, that why we are attracting higher premiums to the emerging market. So that's the thesis.
All right. Now, Manuj, moving on to you, in this column, you've highlighted the unique aspects of India's governance and diversity. Could you share some more about, what sets it apart? What is so extraordinary about it?
So take example of investing in one individual company before we talk about on a country level. So when you invest in a company, individual stock, you become minority shareholders and you expect that, okay, this company is going to generate cash flows over the years, hopefully perpetually, and these cash flows will grow. And because I'm a minority shareholder in that particular company, I have a proportionate right on those future cash flows. Now, if you start to believe that these cash flows are being diverted by the majority shareholders and you are not getting what you should be getting proportionately as a minority shareholder, you tend to give lower multiple to those companies. Now, same is true. Now, you call it corporate governance, but the same is true on a country level as well. So if as a investor, it can be corporate investor, individual, it can be foreign or domestic, if you believe that your property rights are safe, okay, or you believe that even if somebody is going to challenge those rights, you have a fair chance of raising your voice and being heard by the judiciary system. And if at all you are on the right foot, the judiciary system will take decision in your favor and you can continue to operate. I think that gives a lot of confidence to the investors. And like those companies where the corporate governance are very high, typically trade at a higher multiple as compared to somebody with weak multiple. Secondly, the asset quality. You see, in India, if you compare India's sectoral mix, India's equity market sectoral mix, and you compare that sectoral mix with other emerging markets, you see we have one of the lowest concentration. There are countries where the entire stock market is concentrated within 2 or 3 key sectors, but that is not the case with India. Secondly, historically, we have seen that PSUs typically trade at a slightly lower multiple as compared to the private counterpart. Globally, this is true. So in case of India, the PSU weightage is about 12% as compared to the emerging market, which has a weightage of about 21% on an average. So if you have a lower weightage, obviously your multiple will start looking slightly on the higher side. Lastly, because of the fact that our entire equity market structure is less concentrated, be it on a sectoral level or be it on a stock level, and the weightages of cyclical sector is very low, we have shown a tremendous amount of stability in terms of our earning as compared to the global emerging market in terms of downturn. So all these factors are basically some of the reasons why typically you will see India trading at a premium as compared to the emerging market.
Just to add on what Manuj has said now, So for example, if you see our mutual fund structure, the mutual fund AUM is growing because if you see the structure is very good. It is a very independent structure. We are having 4 components like asset management company, we are having trustee companies, right, who take care of investor rights. We are having custodians who take care of the unit capital. We are having registrar. So, all those 4 entities are independent and that which brings great level of transparency and distribution of power. So if you see India, consider India as a company, right, rather than a country. So in India, the judiciary, the election commission, right, and the central banker are different from government. So government can't dictate terms, right? So which gives a feel good factor and confidence to the foreigner that okay, if there is some problem with the government, I can have recourse. I can go to the Supreme Court and have my rights. There is a property rights, right? For example, if in case of physical properties, if there is a problem with some land parcel, there are significant encroachment. Those lands will always available at cheap prices, but at quality premises, at quality areas, the land prices are higher because there are good property right. There is less encroachment, right? So all this account for premiums, and so there is a process, there are policies, and there is a separation of power, and that makes India attractive, and because of that, the India also trades at premium to the emerging market.
Okay, I agree about, all of these points that you've listed. It's all factored in. Everyone knows about it. But can you explain how can one benefit from this India premium?
So everyone knows about everything, but implementing those things is also a challenge, right? So all of us know that getting up early, having diet food is good for health, but how many of us do it, right? So जानामि में धर्मम नच में प्रवृत्ति, जानामि में धर्मम नच में निवृत्ति. सबको सब कुछ पता है, right? To implement this require lot of policies, lot of processes, right? So for example, if 15 years back somebody would have invested into China market, right, for his retirement, but now China is not trading at same PE multiple. Maintaining those multiples is also a part of processes and policies, right? So if today you are investing in India for a 10 year, 15 years view, you also have to ensure that those PE multiple, those premiums should maintain over that period. And all these processes, this diversification power ensure that this will trade at such premium for longer than expected. And if you see in developed market, same thing has happened in US. The market is traded at higher multiple for a long period of time because of all these things, right? So it is a journey from emerging market to a developed market where democracy play a important role. So if you see in most of the emerging market and Asian markets, are some are kingdoms, right? King decide everything, right? But here it is a democracy. Everything is very transparent. People have a right to say, people have a right to vote, right? Which will visible to the entire world. And that is what is the power of democracy. So all this democracy will take long time to implement, right? We are the biggest democracy, and our democracy score is also very high. So not only having the premium, but maintaining those premium for a long period of time, ensure that your retirement plan will meet up if you invest in Indian equities. However, it requires continuous efforts and improvement to further enrich it.
I think Ruchira, the central point is that because India is trading at a premium should not be the point that somebody decides because right now India is trading at premium, so it is expensive. That is the whole point, because when you see some of the narratives, you see that narratives are made that India is trading premium, and that's why it is expensive. The central point here is that you look at 20 years history. Over the last 20 years, India was always trading at premium, and there is a solid reasons behind it. So this should not be the only criteria while deciding whether markets are expensive or not. Obviously, there are many other criteria. This can be one of the criteria, but because of the structure of our country, it makes sense for a country like India to trade at premium.
All right, but Manuj, like Chirag mentioned, that things have changed in China. So what, in your opinion, will turn this India premium into an India discount? What can derail it here? A change in government, geopolitical reasons?
I think whatever we have discussed here in the column which got published in July edition of Wealth Insight, opposite of all those things, can reduce the India premium or premium for any country. So hypothetically, let's discuss some examples hypothetically, like what happened a couple of years back with one of the countries where they involved in geopolitical conflict with another country. So that is a detriment to the overall sentiment. In one of the country, regulatory measures was taken against edtech company, okay, in fintech company. Again, that has shaken the confidence of the investors, both domestic investors and foreign investors. So any such thing, okay, by some regulatory action which is detrimental for the minority shareholders, countries involving into prolonged geopolitical conflict, all these things will, reduce the premium for any country, which looks very, hypothetically we could discuss, but looks very, very unlikely. I mean, over the last 20 years, I gave you 20 years data. India has seen a lot of challenges, but it has maintained this premium. Lastly, when we are talking about India premium as compared to emerging market, it is also a function of what is happening in other emerging markets. Like take case of China. China used to command about 43% weight in MSCI Emerging Market Index 3-4 years back. As we speak, because of the derating happened in China, they command only 27% approximately weight in emerging markets because it has derated. So obviously, even if you are not good, even if your country's multiples are not increasing, but because of the fact the overall multiple in the emerging market baskets are dropping because something is happening with a couple of countries in that country in that basket, again, for technical reason also, you will see that your country is trading at a premium, which is one of the highest in last 5 years, but there is a solid reason behind it. So the whole point is that while, deciding whether to invest in India or not, you have to read a lot about the reasons why it is happening. And you need to understand that if India is trading at a premium, there is a solid reason behind it. Obviously, then there are other factors you need to take into consideration.
All right. Well, as India continues to evolve, understanding these dynamics, I think, becomes crucial for investors and stakeholders. So thank you, Chirag and Manuj, for sharing your valuable insights. And for more in-depth analysis, be sure to read this column in the July edition of Wealth Insight. Thanks.
Thank you.